Hey, what is up, everyone? Good morning. I want to apologize for yesterday's technical mishap. It was like a 10-second video of me cracking my neck. So sorry about that. It just didn't work right. It just shut off and that was it. So today we're back. It is Wednesday, right after a long weekend. We had some market downside yesterday as we were anticipating. If you guys um, are on our mailing list for our weekly market breakdown, so you guys can go and check that out, right? But overall, what I wanted to talk to you guys about today is number one, we're going to be opening our live trading room for futures trading. If you're in our Discord, go check that out. Community.tradeproacademy.com. The link is in there. It's also on our Twitter, so come check us out. We're going to be opening this up in about like 10-15 minutes for everyone. We're going to be live trading today and tomorrow. Other than that, we have a free futures course that's available on our website, right? Just go and check that banner out if you go to tradeproacademy.com. It's laid out for you guys. It's about like maybe like 7-8 lessons. You'll see it there. Absolutely free futures course, trading any market condition, understanding volume and order flow. So you can go and see that. But let's get into it today. Right, we have some more downside here overnight in the markets as we get into a very, very overbought territory where a lot of market participants are expecting some kind of pullback in the markets, right? Some kind of pullback. Historically, this is one of the weaker weeks in the market, right, where we see downside coming in after the June OPEX and FOMC, right? Typically, seasonality starts to shape out in the downside direction into these coming weeks. As Jerome Powell was hawkish last week, and he's gonna jump on again, right? Semi-annual monetary policy testimony before Congress is going to take on additional importance this time around as investors do size up last week's FOMC. That was fairly hawkish from Jerome Powell. Policymakers kept rates on hold. We saw that no change, 5 to 5.25 percentage points, or what some are calling a hawkish pause, looking for another 50 bip increase at the end of the year. So oh, wow. Cats are yelling. Nice. So, what we'll see is nearly all policymakers felt similarly about monetary tightening, while Powell portrayed the skip as an opportunity for the central bank to evaluate how policy direction was impacting the overall economy. Heading over to Capitol Hill, Powell will answer questions from the Senate Banking Committee at 10 a.m. Eastern today and appear before the House Financial Services Committee on Thursday. So, it's a two-day event. So lawmakers are likely to delve deeper into why he felt that now was the right time to pause hikes and what metrics the central bank continues to analyze following one of the swiftest hiking campaigns in history. Inflation also running well above the 2% target. Realistically, if you take a look at something like Trueflation, for example, like a Twitter handle, you'll see that the inflation figures are actually not too far off 2%, but the labor market still does remain tight by historical standards. So traders pretty much shrugged off last week's FOMC hawkishness, run into the end of the week. Right now, some downsides opening up. I do expect to start to see more of a pullback in the coming weeks. Nothing too drastic, but I think those dips do get bought into more favorable territories where strong-handed buyers are expected to be found. So this builds on last week, builds on the 2023 rally. Massive upside over the past few weeks here, just parabola sky high. So big risks like a broader banking contingency are off the table, and debt ceiling drama has been resolved until the next election cycle, which is helping markets continue that press up. You also have earnings that are doing fairly well, and the expected earnings recession is something that seems to be canceled. So other economic indicators have also come in stronger than expected, like the surprise jump in monthly construction of new homes. So we also have the yield inversion, right? It's very closely watched. On Tuesday, widened to a 4-decade high, reaching 97 basis points for the 2 and 10 year. While it may make for a good headline, we can see that another prediction of a future recession that will probably end up being much milder and much shorter than anticipated, right? The yield has been inverted for a very long time, and I think that everyone is focusing on this cataclysmic drop and trying to pull black swans out of thin air. But remember, they are black swans for a reason. So right now, we're inching closer and closer to a softer landing, and we'll see what Jerome Powell says over the next 2 days. So And that's what I have mainly in terms of news. We also have some Tesla news. Yesterday, Tesla rallied pretty aggressively. Really green day on Tesla, continuing towards that $300 level. I think it might be up pre-market here, but I'm not 100% sure. And Texas will be the first U.S. state to mandate Tesla's electric vehicle charging system, and a huge win for CEO Elon Musk, who is working towards making the connector the industry standard. So experts also believe that the decision could push other states to adopt the system. And in addition, Tesla is poised to benefit from China's $72 billion tax break for EVs, while Musk hinted at launching another a Tesla in another major Asian market, which, if you have guessed, is India. So we'll see how that does shape up. But Tesla's on a pretty strong rampant run here. Maybe I should have held some of those swing calls, but that's okay. I'll be looking for pullbacks in the next few weeks for big tech and just general higher beta names to see if we can get some of that dip into a rally. But in terms of the trading plan for today, let me just open Sierra charts here. So the trading plan for today, we have a lot of volume that's opening up at the lows here on the overnight session, which typically turns into somewhat of a bid. We have a distribution block that starts at 44.23.24, right? And that's the top of the distribution block. The lower end of the distribution block is close to 44.06.08. If we accept under these low 20s a little more aggressively, what we're going to see is anticipated downside to continue in the market to tag that 0608. And if that lets go, my target for the day is 43.93. That's my downside target. If I want to be aggressive, my downside target is 43.80.82. But I could see a little pop maybe into the 30.29 area on the S&P 100 futures before we see more of a sell-off. If we just start selling right off the open, right, we're just going to be playing this distribution as is to see that continuation to the downside. I do lean a little more bearish after we saw the rejection of 44.44 yesterday twice, and a strong downside move and a reoffer into the close of the session, which made me pretty happy with those shorts and to see if this continued sell can open up into the end of the week. They're not getting super aggressive. It's more of a controlled sell, but the buyers are stepping away from this, letting prices come into territories that might be more favorable for strong-handed buyers. So that's what I'm going to be looking at today. That's how I'm going to break this down. We're going to open our live trading room fairly shortly, and I want to welcome you all to that live trading room. So go and check that link out. It's going to be in our free Discord. And yeah, I hope everyone has an amazing day. Thanks for joining me, everyone. My CryptoPie, Mary, Kevin, Dan, Ad. I hope everyone has an amazing trading day. Happy Wednesday. I'll see you guys tomorrow and on Friday. On Friday, I'm going to be in Greece again, so it'll be fun, right? I hope everyone has a great week, and let's open up our trading room today and tomorrow, and we'll see you all in there.